As far as the tariff risk is concerned, you're saying that it might be a quicker rollout compared to Trump's first term in terms of the tariffs hitting China. The impact of 30 to 40% tariffs will be relatively muted. Explain that.
Yeah, and the tariff, the proposed tariff, has impacts in twofold. On one hand, it definitely have impacts via the export. On the other hand, it's going to provide catalyst for more policy support, as we mentioned, which is the key for domestic growth, especially for consumption. Why we believe the 30 to 40% is relatively muted because first of all, the timing, as we know, is going to be quick than the first term. Secondly, the market consensus right now is roughly 30 to 40%, which is 10 to 20% on top of the 20 existing tariff. According to our calculation, if it is just additional 10 to 20%, the overall impact to GDP growth is going to be relatively less than 0.5 percentage points. On top of the fiscal support, it's going to be manageable for the markets. Not to mention the market consensus is relative at this level is largely priced in. Let me give you an example. It more feels like the episode after 2019 April when the third batch of 200 billion, the third patch of the tariff, its impact on the market. It's moving like a fluctuation. I won't say there won't be any impact, but it's priced in. There has some policy support for that to counteract the impact, so it's manageable. But in any extreme case, it's going to be 60% tariff. There are still going to be larger impacts for the markets. So that's how we see how the tariff potentially impact the Chinese market itself.